Hello, welcome to today's learning session. I'm Arpita Sengupta. Today, I will be teaching you goods and services tax, basic concepts, and implementation of that implementation of GST in Tally Prime. Okay, now let's discuss goods and services tax first. What is GST? GST is indirect tax which is implemented in our country since 2017. Since the year 2017, it replaced various other taxes uh, in order to implement GST. GST is a comprehensive multi-state destination-based tax. It replaced various other indirect taxes which was prevalent in India at that time with a single tax which is known as GST. It is levied on value addition at each stage of the supply chain. We have various objectives of the implementation of GST, such as it eliminated the existing cascading tax effect which was prevalent in our previous tax structure. It created a unified tax system. It increased tax compliance. When more and more revenue has been generated and more compliance has been generated from the implementation of GST. There was a boost. The main objective was to boost the economic growth, to promote a one tax for one nation throughout our country, and definitely to improve revenue collection. GST was primarily implemented to simplify the complex tax structure which was prevalent in our country, and also to remove the cascading effect. Cascading effect means tax on tax effect. Means in our previous tax structure, we had to pay tax on the taxes which were implemented. That is known as the cascading effect. One of the main objectives of GST was to remove the cascading effect of GST, seamless input tax credit, reduction in overall tax burden, ease of doing business. If the tax structure becomes simplified, then doing business will also become simple, better logistics efficiency, encouragement of digital transactions. Now, what are the components of GST? Under GST, we have the following taxes. What are the following taxes? CGST, that is Central Goods and Services Tax, SGST, that is State Goods and Services Tax. Whenever goods are moved from one state within a state, whenever goods are sold, goods or services are supplied within the same state, then the tax structure, then the tax rate is divided into two tax components, that is CGST and SGST. That is Central Goods and Services Tax and State Goods and Services Tax. For example, our tax rate is 18% of the goods which is being supplied. Okay, or the services which is being supplied. Now, in this case, when the supply is made within the same state, the 18% rate will be divided into two components, that is 9% CGST, 9% SGST. And in this manner, a coordination among state and central, which was never there before, has been affected. Now, whenever goods are sold from one state to another state, which is known as interstate transaction, goods and services are supplied from one state to another state, which is known as interstate supply of goods or services. In that case, IGST is implemented, Integrated Goods and Services Tax. And whenever goods and services are being supplied within the union territory, then CGST and UTGST are being applied. That means in that case, CGST and SGST is not applicable. In that case, CGST and UTGST is applicable. For example, if the rate is 12%, 6% will be CGST, 6% will be UTGST. Now next, let us come to the next point, that is person liable to pay GST. A business whose turnover has exceeded the threshold limit. We will discuss about that in our slides later on. Persons who are under reverse charge mechanism, persons who are business persons who are e-commerce operators, business persons who are casual and non-resident taxable persons are liable to pay GST. Now, what is the difference between present tax structure and the GST? And GST. Present means previous tax structure. Multiple indirect taxes versus single tax. Higher tax burden was prevalent in our previous tax structure compared to reduced tax burden nowadays. Cascading effect versus seamless credit. Complex compliance. Initially, the compliance was complex because a person has to go through different compliances for different taxes. One compliance for VAT, one compliance for manufacturing for excise duty, one compliance for services tax. Now, person, you had to go through multiple compliances. Now, in case of GST, one compliance is all through which a person, through which the tax is applicable to all over taxes, all over incidences like manufacture of goods or services, supply of goods or services, sale of goods or services, everything. Multiple registration versus one registration. Initially, it used to be multiple registration as because there were multiple types of tax, all under different tax on different authorities. And now it is one registration, that is the whole taxation, indirect taxation must come under one authority, that is the GST Council. Important definition. Now, GST is applicable on goods. What are goods? Goods are movable property except money and securities. Services. Now, one more thing regarding movable property. In case of immovable property, such as land, GST is not applicable. Now, services. Services means supply of services except goods, everything except goods. Supply means sale, transfer, lease, or disposal of goods or services. Aggregate turnover means total of taxable and exempt supplies. Both aggregate turnover means what? Total. It consists of both taxable and exempt supplies. Reverse charge means whenever normally in cases that goods and services tax, GST is applicable on the is liable, is chargeable on the supplier of goods and services. But in certain cases, buyer of goods and services are liable to pay the tax, goods and services tax. Then that mechanism is known as reverse charge mechanism, RCM. Now, when tax liability shifts from supplier to the recipient, that charge is known as reverse charge mechanism. Composite supply. Composite supply is an incident where two or more suppliers are made as a single supply. That means laptop is sold along with the servicing of the laptop. Okay, along with software installation, everything. That is known as composite supply. Mixed supply means when two or more independent supplies are offered together, like sale of pen along with watch. Watch and pen are supplied together. Both are independent supplies, but they are supplied together. In that case, that is known as mixed supply. Okay, in case of mixed supply, if the items consist of different GST rates, the rate which is the highest among all the goods will be applicable on all over the supply. Okay, and in case of composite supply, principal tax on principal supply will be applicable. Okay, this is the principal supply, that is tax on laptop. The rate of the principal supply will be applicable on the all over supply. Next is meaning and scope of supply. That is, supply includes sale, transfer, barter, exchange, lease, rental, and disposal. It includes import of services for consideration. Transactions between related parties also consider supply. That means if a company has sister concern, a company is making a transfer or a sale, transfer of goods from its concern to its sister concern, then that will be also considered as a supply and GST will be applicable. Supply can be taxable, exempt, zero rated, or non-taxable. Now, services by an employee to an employer is not considered as supply of goods nor services. Okay, services by any court or tribunal is not considered as supply. Now, services by an employee to an employer is in the course of employment is cannot be considered as supply, nor the services by any court or tribunal, duties performed by members of parliament, state legislature, etc., sale of land and completed buildings, actionable claims like except lottery, betting, and gambling. These instances are not considered as supply of goods nor supply of services. Tax liability on composite supply. What is composite supply? In our previous slide, I already just mentioned that composite supply consists of two or more naturally bundled supplies. Naturally bundled means one supply does not come individually as a separate supply. It comes because of the part of the principal supply. Means sale of laptop with a warranty and insurance. That means this warranty, supply of warranty and insurance is not an individual or a separate supply. It has come because of the sale of laptop, supply of laptop. When a warranty or insurance cannot be separated from the sale of laptop. So this is an example of composite supply where the supply, the two supplies cannot be separated, cannot distinguish as a separate supplies. Okay. So the tax rate of the principal supply, that is the laptop, is applicable to the entire supply value. That means if along with the warranty and insurance, the price of laptop comes to 60,000, then the rate of the supply of laptop, that is 18%, will be applicable on the overall value of 60,000. Okay. Mixed supply. Mixed supply means where it consists of two or more supplies which are not naturally bundled, which can be distinguished as separate supplies. For example, a gift hamper consisting of chocolates, cosmetics, and beverages. Now, these three items have three different rate of GST. But in this case, the principal GST rate will be the highest GST rate among these three goods. Okay, the highest rate of tax will be applicable on the entire bundle price. Levy and collection of tax. GST is levied on the supply of goods and services. It is collected by central and state governments. CGST, SGST, and IGST. Businesses exceeding the turnover threshold limit must get registered under GST. Reverse charge mechanisms applies in specific cases. For small tax, now we have a concept known as composition scheme in GST. What is composition scheme? In case of small businesses that turnover is up to 1.5 crore in a particular year, 75 lakh in case of some other states. Okay, then in those cases they have an optional scheme that is known as composition scheme. What is a composition scheme? They can opt for, this is an optional scheme. And a small dealers can opt for composition scheme, that is 1% for traders, 5% for restaurants, etc. In this case, they can pay a lower rate of GST, but they cannot claim input tax credit. Input tax rate cannot be claimed by composition scheme dealers. It is a simplified compliance and tax filing. Now, there are some exemptions in GST also. Exempt supplies include essential goods like unprocessed food, fresh milk and educational services, healthcare services and public transportation. Exports treated as zero rate supplies. No GST is levied on these supplies, and ITC is not claimable for exempt supplies. Goods means what? Goods means any tangible, movable property, including food, electronics, and furniture. Services means anything other than goods, including consulting services, telecommunication services, and healthcare. GST is applicable to both goods and services with different tax rates. Now, what is the threshold limit for GST registration? For goods, it is 40 lakh for normal category states, and in case of special category states, that is Jammu and Kashmir and all, the rate is 20 lakh. The threshold limit is 20 lakh. For services, 20 lakh for normal category, 10 lakh for special category. Mandatory registration for whom? Interstate supply of whenever goods are supplied from one state to another, it is mandatory. E-commerce operators, casual taxable persons, and non-resident taxable persons. Now, whenever a person whose threshold limit who is liable to get registered under GST will get a unique GST registration number, which is known as GST. What is the GST structure? It is a 15-digit alphanumeric code, alphabetic and numeric code. First two digits is the state code. Okay, like for West Bengal, it is 1919. Next 10 digits is the PAN of the taxpayer. PAN, permanent account number of taxpayer. So, in case of GST, PAN of the taxpayer is mandatory. The person who will apply for GST registration has to apply with the PAN. 13 digit is the entity code, which is assigned based on registrations under PAN. 14 digit is the default Z, which is currently default alphabet Z, which is currently unused. And 15 digit is a checksum digit which is automatically generated at the time of generation of the GST number, which is a checksum digit for error detection. So first two digits is the state code, next 10 digits is the PAN, 13th and 14th digits is the entity code and default alphabet, and 15 digits is the checksum digit for error detection. What are the taxes subsumed under after the implementation of GST? The taxes which are subsumed are central excise duty, service tax, additional duties of excise duty, countervailing duty applied on imports, special additional duty of customs replaced by which was prevalent is replaced by IGST, central sales tax CST, which was earlier imposed on interstate sales. Now the state taxes subsumed by GST are value added tax VAT, octroi entry tax, which was earlier imposed on goods entering a state, luxury tax applied on hotels, resorts, etc., entertainment tax previously charged on cinema and events, purchase tax earlier imposed by some states on agriculture goods, taxes on advertisements previously levied by local bodies. What are the benefits of subsuming taxes? Simplified tax structure, as we all know. We have a one tax structure for all kinds of supply, different kinds of supply. Reduction in cascading effect, that is tax on tax effect. Ease of compliance, compliance has become easier as well. Better revenue collection. Okay. So after this, we will move on to the implementation of GST part in Tally Prime. So let us load Tally software and load our company. Okay. Now we can see the Tally software. I have already loaded a company, ABC Private Limited. Now, what we will do, how to implement GST. The very first basic step of implementing GST in Tally Prime is activation of GST. So how to activate GST? We will have to go to first, we will have to load Tally software. We will have to load our company. And after loading of company, we will go to Tally features. Where we will go? We will go to Tally features by pressing the shortcut key F11. The shortcut key to invoke Tally features is F11. Now, here we will go to this option, enable goods and services tax. We will activate, set this feature to yes, enable goods and services tax. This feature has to be set to yes. After this, we will have to put down the following information. That is the state name, whose compliance we are going to use, registration type. I have put down the type, type as regular, assessment of other territory, yes or no. Then we have to put our company's 15-digit GST, okay, for which we are working. Periodicity of GST are 1. I have chosen monthly. GST username also we can give. Mode of filing, either BST or EVC. E-invoicing applicable. Now, e-invoicing is a concept. Whenever GST goods are, in case of GST, during each and every transaction, e-invoice has to be generated mandatorily. So, e-invoicing feature applicable has to set to yes. Applicable form will be the company financial year beginning date. Invoice bill from, we have to mention the place of business over here. Now, e-way bill applicable. What is e-way bill? In case where goods, the value of supply of goods or services exceeds goods, value of supply of goods exceeds 50,000 during a particular supply, e-way bill generation is mandatory. In case of within the same state, if it is within other state, the limit of e-way bill is 50,000. Okay. Applicable from 1st April 2024. Applicable for intrastate, yes. After that, we will save the Tally features option. And then after activating GST, we will go to creation of masters. What masters do we need to create? First, we will create some ledgers. Go to create option, ledger, and then come over here. First ledger, what we will create is a purchase ledger, which is to be used at the time of purchase of goods and services. Purchase, it will be under the purchase accounts group. The group name will be purchase account. Inventory value that affected option has to be set to yes. Type of ledger not applicable. including accessible value calculation not applicable, GST applicability applicable. HSN or SSC details will be as per company group, as because this will depend on the items what we are going to sell. GST rate details as per company group type. GST rate details has to be specified details here. Okay. Taxability type will be taxable, and GST rate will be 18%. Type of supply is good. In our case, I am taking the rate 18% for supplier to show the example. We will be supplying computer items. We will be buying computer items from a supplier and selling computer items, and the rate which we are going to use is 18%. Type of supply will be goods. Then sales. Similar to this, we will create the sales ledger as well, sales account. Under sales accounts group, the group name will be sales accounts. Inventory values are affected, yes. Type of ledger not applicable. Including accessible value, no. GST applicability applicable. HSN as per company group. GST rate details, specify details here. Taxability type taxable, and the rate will be 18%. Type of supply will be goods. After this, we will create the supplier ledger and the customer ledger. Supplier ledger means the supplier from whom we are going to buy the goods, and customer ledger means the customer to whom we are going to supply the goods. Okay. So first, let us create the supplier details. The name of the supplier is Lalani Infotech. Under it will be sundry creditors, maintain balances bill by bill. Yes, in this case, mandatorily we have to provide these details: name, address, state, to which state this supplier belong to, the supplier's PAN, registration type, GST. These details has to be filled up mandatorily for proper GST applicability. Okay. Address. We will take down the address. Address, state West Bengal, PIN code is 70012. PAN or IT, we will, after giving the GST, we will take down the PAN. Now let us put the GST in first. Now from this GST, we will take down the PAN. Okay, that is AAA CL 566 2Q 1Z, 2Q, 10 digit. Okay, 10 digit PAN. After this, we will create, after creating the supplier ledger, we will create the customer ledger. The customer name is, to whom we are selling the goods, name is Nimbus Infotech Private Limited. Nimbus Infotech Private Limited. It will be under sundry, under the group sundry debtors. Maintain balances bill by bill option has to be set to yes. Then again here we have to put the address and other details as well. Address, state West Bengal, PIN code. PIN code will be 70072. Then the GST number. GST number is mandatory. GST is putting GST in, and PAN is mandatory. Okay. So from the GST we will take the PAN again. AAA 10 digit PAN CL 4560H. Okay. After successfully providing the details and creating the supplier and customer ledger, we will create the GST tax ledger. Okay. So what tax ledgers we will create? In our example, we in this session, we are looking into intrastate supply of goods and services. So whenever we are buying goods, whenever we are purchasing goods from the same state, from Lalani, input CGST and input SGST will be applicable. And whenever we will be selling goods to Nimbus Computec Private Limited, we will be applying output CGST and output SGST, as because we are making taking the supply from the same state, and we are also making the supply in the same state. In case of same state, CGST and SGST is applicable. Okay, and the entire rate is divided into half money for CGST and half for SGST. So next, we will create the GST ledgers. First, the GST ledgers which are to be used at the time of purchase. Input CGST, under will be duties and taxes. The group name will be duties and taxes. Type of duty or tax will be GST. Here, after selecting GST, we have to select the GST tax type. That is, it is CGST, so the GST tax type will be CGST. Now here we have to put the rate. What rate will be this? In case of in our case, we will be buying and selling computer items. So the rate of percentage is 18%. The total rate is 18%. In case of CGST, it will be 9%. In case of AGST, it will be 9%. So we'll put down the rate 9%. Rounding method not applicable. Next, input SGST under duties and taxes. Type of duty tax GST. Type of GST tax will be SGST or UT GST. Rate will be 9%. Next, output CGST and output SGST. Output CGST under duties and taxes, GST, CGST, and rate will be 9%. Output SGST as well under duties and taxes, GST, type of GST will be SGST or duty GST, rate will be 9%. After creating the ledgers which are necessary for GST, we will create the stock items which are necessary for GST. So for that, from Gateway of Tally, again we will go to create option and go to stock item option. No, not stock item. First we will create the stock unit of measurement, that is unit. First we will go to unit and create a simple measurement unit of pieces, as we are going to buy computers in with the measurement unit pieces. Symbol will be PCS, symbol will be PCS, formal name will be pieces. Unit quantity code has to be mapped for pieces to pieces. Number of decimal places, for example, 2. Or number of decimal places is 0, because computer we cannot sell in decimal places. Quantity. After creating the unit, we will go to stock item creation. What stock item shall we create? We will create 3 stock items, that is computer, mouse, and keyboard. Computer under primary, units will be pieces, GST applicability will be applicable, HSN will be HSN details. In case of stock items, we will have to mandatorily provide HSN code, 8-digit HSN code, otherwise proper GST rate will not be taken. Okay, specify details here, and we'll have to put the HSN code of computer. Okay, after the GST rate details, specify details here. It will be taxable and GST rate will be 18%. We have to give the whole rate, not half of 9%, 9%. The whole 18% rate has to be given over here. Type of supply will be goods and safe. Next item what we will be buying and selling is mouse. Okay, then let us state mouse. Mouse under primary, units will be pieces, GST applicability applicable, HSN code we have to provide specified details here. HSN code of mouse is this one. Description, we can look out for this description under the HSN details, HSN code details available over net. Okay. GST rate specified details here, taxable rate will be 18%, the type of supply will be goods. After that, we will be creating one more stock item, that is keyboard. Keyboard. Under primary, units, pieces, GST applicability applicable. Again, we have to provide the HSN code of keyboard and the GST rate of keyboard sales. Okay. After creating these necessary masters, we will pass the GST voucher entry. From where we will go to gateway of tally. What vouchers are we going to pass? Suppose we are buying, we are from Lalani Infotech. We are going to buy 5 computers at the rate 35,000 and 5 computers, 5 mouse and 5 keyboard. Okay. And we are going to sell them to Nimbus Infotech Private Limited. So let us go to vouchers, gateway of tally vouchers, and we will have to go to purchase invoice. What is the shortcut key of purchase invoice? It is F9. Then we'll have to give the date. Let us choose the date 1st August. Then we have to give the supplier invoice number, which will be provided by Lalani to us. The invoice number, which is contained in the invoice, which is being provided by Lalani Infotech to us. Okay. PU or SAL/LAL/05. 1st August. This date will be the invoice date. The date of invoice, which is the invoice which is provided by Lalani to us. Okay. Party name will be Lalani Infotech. Here we have to provide. We can provide the challan details, supplier bill from Lalani, GST details, everything. After that, the purchase date, purchase account, percentile class not required. Name of item. The name of item will be computer, 10 pieces at the rate 40,000. Mouse, 10 pieces at the rate 200. Keyboard, 10 pieces at the rate 150. These are the stock items. You have selected the stock items. After selecting the stock items, we'll press enter and come to this line. Here we will select the input CGST ledger. After selecting the input CGST ledger, if every details are being put correctly, the GST rate and the amount will be taken automatically. Okay. Then input SGST. Now let us just look into the calculation part. 9% of 403,500, that is 36,315, and 9% of 403,500, that is 36,315. That means total 18%, that is 72,630. Okay. GST e-waybill details. When we are going to generate, in this case, the value is more than 50,000. E-waybill has to be generated, but when we are going to generate e-waybill while we are making transactions, we have to provide the transfer details and everything in the GST e-waybill details stream. Here I am selecting no. Okay. Then we will provide in the bill wise details, we will provide the bill number and check the amount and then save the voucher entry. Okay. Now after passing in this manner, we have to pass the purchase invoice. After that, we will pass the sales invoice. That is whenever we are supplying the goods or services to the customer. The shortcut key for sales invoice voucher type is F8. You have to press F8. Then we have to put the date. Suppose let us choose 2nd August date. Party name will be Nimbus Infotech Private Limited. Here you have to put our delivery note number and everything, and the Nimbus Infotech details. Sales ledger will be sales account. Name of item will be same computer. We are selling 8 pieces of computer at the rate 50,000. Sorry. And mouse, 8 pieces at the rate 300. And keyboard, 8 pieces at the rate 250. Okay. After that, again, here we will select the GST ledgers. But what GST ledgers now we have to select? We will select output CGST, okay, and output SGST. So in this manner, we will pass the purchase invoice and the sales invoice along with GST ledgers and the necessary masters has to be created with proper GST and proper HSN code and rate details so that correct GST amount is being calculated and being taken. Okay, we can provide in case of if we select e-waybill details, yes, as because this value transaction value is more than 50,000 within the state, within the same state, if the value is more than 1 lakh, mandatorily we have to generate e-waybill. So we have to put the following details, that is dispatch from, to, from place to place, transporter name. We have to create the transporter details over here. Without this, actual e-waybill generation is not possible. Okay, we need to get these details to prepare to generate e-waybill. Here we have to provide the invoice number. In this manner, we are going to create purchase invoice and sales invoice in GST after activation of GST and creation of necessary masters. So this is the very basic of GST. Okay, GST creation, GST activation, and GST entries. There are lots of other things that can be done in Tally ERP while recording GST related entries. We can generate, maybe we are able to generate return files from the Tally software as well. We can pass voucher entries with multiple GST dates in a single invoice, where we can apply multiple GST dates as well. There are lots of other options what we can do. What we will, these topics we will see gradually in our other learning sessions. I will expect the viewers to go through this video details and practice this contents and revise this contents so that we can move on to the next advanced session. Till then, go through the video, learn them properly and practice them for implement so that we can implement the other advanced part as well. Thank you.